G'day everyone, and welcome back to ETF Insights Australia, the channel that makes Aussie investing simple, clear, and actually interesting. Today we are doing something a little bit different. We are going to space. Well, not literally, but your money might be about to. Because right now, literally this week as I record this, the biggest IPO in the history of the stock market is about to happen. I'm talking about SpaceX, the Elon Musk rocket company, the company behind Starlink, the company that's been sending humans to the International Space Station. That's SpaceX. They are listing on the Nasdaq under the ticker SPCX on the 12th of June, 2026, and they're targeting a valuation of $1.75 trillion. To put that in perspective, that's bigger than the entire Australian share market. Now here's the problem for us Aussies. SpaceX is not listing on the ASX. It's listing in America. So how do ordinary Australian investors get a piece of the action? That's exactly what we're going to answer today, and the answer involves a brand new ASX ETF that was only listed a few weeks ago, a couple of international options, and a really interesting mechanism that could automatically put SpaceX into your portfolio. This is going to be a long one. Grab a coffee. Let's go. Why space is a serious investment theme. Before we look at any ETF, we need to understand why the space industry is becoming an investable theme. Because not long ago, space was essentially a government thing. NASA, ESA, Roscosmos, taxpayer funded, not something ordinary investors could touch. That has fundamentally changed. And the reason is one word: cost. The launch cost revolution. Back in the early 2000s, putting 1 kilogram of payload into low Earth orbit cost around $20,000. Today, with SpaceX's Falcon 9 reusable rocket, that same kilogram costs about $2,000. That's a 10 times reduction in 20 years. And when launch costs drop that dramatically, suddenly all sorts of commercial applications that were never economically viable become viable. Satellite internet, Earth observation, space tourism, in-orbit manufacturing, even asteroid mining, if you believe the longer-term visionaries. The industry is undergoing a structural shift. Commercial participants are now playing an increasingly important role in areas like satellite communications and data infrastructure. We're moving from a government-led domain to a commercially driven ecosystem, and that means publicly listed companies that investors like us can access. The subsectors of space. The space economy is not just one thing, it's a whole ecosystem of subsectors. Let me walk you through the main ones quickly, because these are what you'll actually be buying into with a space ETF. First, satellite communications. This includes companies like Rocket Lab and AST SpaceMobile, which build and deploy satellites for internet connectivity, GPS, weather, and defense applications. This is the largest and most commercially established part of the space economy today. Second, launch services. The companies that actually put things into orbit. SpaceX dominates this, but there are others like Rocket Lab, Firefly Aerospace, and a bunch of newer entrants. Third, Earth observation. Companies like Planet Labs that operate large constellations of imaging satellites. Every day they photograph every inch of the Earth's surface. The data they generate is sold to governments, agriculture businesses, logistics companies, and financial institutions. Fourth, infrastructure and manufacturing. The less glamorous but important stuff, the suppliers of rocket components, satellite hardware, ground-based tracking equipment. Think of them like the picks and shovels play on the space rush. And fifth, emerging technologies. This is the Wild West. Space tourism, in-orbit servicing, lunar infrastructure, deep space exploration. Long timeline, high risk, massive potential upside. Okay, now that we understand the landscape, let's look at how to invest in it as an Aussie. BetaShares RCKT, Australia's first space ETF. Alright, let's talk about the main event for Aussie investors, the brand new BetaShares Space Industry ETF, trading on the ASX under the ticker RCKT, as in, rocket. I love that. This ETF was only listed on May 2026, it is brand new. In fact, before RCKT launched, there was literally zero ASX-listed ETF dedicated to the space industry. If you wanted space exposure, you had to buy US-listed funds or pick individual stocks yourself. So let's jump over to the BetaShares website and have a look at what we are actually dealing with. I've got betashares.com.au open here. Okay, so this is the official fund page. First thing you'll notice, it says Australia's first dedicated space industry ETF. That's not just marketing, it's literally true. This is the only pure-play space ETF on the ASX. The key numbers. RCKT key fund details. Full name, BetaShares Space Industry ETF. ASX ticker, RCKT. Management fee, MER 0.57% per annum. Fund inception, the 8th of May, 2026. Index tracked, Solactive. Space Industry Index number of holdings, 30 global companies. Framework, ASX Aqua Regulatory Framework as BetaSpace. The management fee is 0.57% per year. Now, compared to a boring broad market index ETF like a 200 at 0.04%, that sounds expensive. But for a specialized thematic ETF, it's actually quite reasonable. The US equivalent, the Procure Space ETF, ticker UFO, charges 0.75%. So BetaShares has come in meaningfully cheaper. The ETF holds exactly 30 companies. That's a concentrated portfolio by ETF standards. Your typical global index ETF holds hundreds or thousands of stocks. With 30 holdings, individual company performance matters a lot more. That's higher risk but also higher potential reward. The index, Solactive Space Industry Index. The ETF tracks something called the Solactive Space Industry Index. Solactive is a German index provider. They're well known in the ETF industry for designing thematic indices. Let me show you their website so you can understand how this index actually works. So what you're seeing here is the index methodology. Solactive screens for companies that derive a meaningful portion of their revenue from space-related activities and then weights them by market cap within that universe. It's a rules-based, transparent process. Not someone's opinion about who the best space stocks are, it's a systematic filter. The current holdings. Now let's look at what's actually inside this ETF. According to BetaShares, the initial holdings include companies like Rocket Lab, the New Zealand-founded launch company that's become a real player in the small satellite launch market. AST Space Mobile, which is building a direct-to-phone satellite network, basically a space-based mobile network. Planet Labs, the Earth observation company with over 200 imaging satellites in orbit. EchoStar, a satellite services company. And Firefly Aerospace. Each of these is doing something genuinely novel. This isn't just tech companies slapping the word space on their products. These are pure-play space businesses. The SpaceX fast entry mechanism. This is the key bit. Okay, now here is the thing that makes RCKT especially interesting right now. I mentioned at the start that SpaceX is about to list. The question is, will RCKT automatically include SpaceX once it does? The answer is yes, almost certainly, and quickly. Here's why. The Solactive Space Industry Index has what they call a fast entry mechanism. Most indices only update their holdings on a quarterly schedule. But this index includes a provision that allows very large IPOs to be added outside of the normal review cycle, specifically if they meet the size and revenue criteria. SpaceX, with a $1.7 trillion valuation, absolutely meets that bar. So the scenario plays out like this. SpaceX lists on June 12th. The index calculates whether SpaceX qualifies for fast entry inclusion, which it almost certainly does. And within a relatively short period, SpaceX becomes a holding in the Solactive Space Industry Index, which means it becomes a holding in RCKT, automatically, without you having to do anything. If you hold RCKT today, you could be holding SpaceX within weeks without lifting a finger. That is a genuinely unique feature of this ETF right now, the SpaceX IPO. What it actually is. Let's take a few minutes to properly understand what the SpaceX IPO actually is, because the numbers are genuinely hard to believe. SpaceX filed its S-1 registration with the SEC, that's the IPO prospectus document, on the 20th of May, 2026. It then filed amendment number 1 on the 1st of June. The listing on Nasdaq under the ticker SPCX is expected on the 12th of June, 2026. The investor roadshow starts the week of June 8th. The company is targeting a valuation of $1.75 trillion. They're planning to raise approximately $75 billion in the IPO itself. For context, The previous record for the largest IPO in history was Saudi Aramco in 2019, which raised about $25 billion. SpaceX would raise 3 times that amount. Let me pull up some of the IPO coverage so you can see the actual filings. You can see here live updates page that SpaceX confirmed in its prospectus that it plans to list under ticker SPCX on the Nasdaq. The roadshow starts June 8th, pricing happens June 11th, and trading begins June 12th. These dates are subject to SEC review, but that's the plan as of right now. What does SpaceX actually do? Let me quickly walk through what SpaceX actually is, because it's not just a rocket company anymore, it's become much more complex. The core business is launch services, building and launching Falcon 9 and Falcon Heavy rockets, primarily on commercial contracts and for NASA. This is profitable and established. But the growth story is Starlink, the satellite internet constellation that now has tens of millions of subscribers globally. Starlink is generating meaningful recurring revenue and is arguably the most valuable part of the SpaceX business. Then there's the xAI merger. SpaceX recently merged with Elon Musk's artificial intelligence company xAI, which created a combined entity that spans rockets, satellites, and AI. This makes the financials more complex but also broadens the investment thesis. And then there's Starship, the giant fully reusable rocket that SpaceX is developing. If Starship works as planned, it would reduce launch costs even further and potentially enable the Mars missions Musk talks about. It's not generating revenue yet, but it represents the long-term upside. The share structure, important for investors. One important thing to flag for investors: SpaceX is listing Class A shares. There are also Class B shares which Elon Musk holds and which carry significantly higher voting rights. This is a dual-class structure, common in tech IPOs. What it means is that as a shareholder in SPCX, you have very limited ability to influence company decisions. Musk retains firm control. That's not necessarily bad. Here's the reason the company is what it is, but it's something you should know. The 30% retail allocation, unusual and significant. Something genuinely unusual about this IPO. SpaceX is allocating approximately 30% of shares directly to retail investors through platforms like Robinhood, Fidelity, and Charles Schwab. In traditional IPOs, 90% or more goes to institutional clients. This direct retail carve-out is one of the largest in history. For Australians, accessing the IPO directly is still tricky. You'd need an account with a US brokerage like Stake or Interactive Brokers. But it does mean retail demand is being taken seriously, and it sets up potentially strong post-IPO performance if retail enthusiasm drives buying. Other ways to get space exposure. All right, so RCKT is the ASX option. But let's look at a couple of international alternatives that Aussie investors can access through platforms like Stake, Perla, or Interactive Brokers. Because depending on your situation, one of these might actually suit you better. Option 1. Space Innovators ETF, ticker NASA, US listed. The first international option is the Space Innovators ETF, managed by Tema ETFs and trading on the Nasdaq under the ticker NASA. How good is that ticker? Now this one already holds SpaceX, because Tema has access to SpaceX shares through its pre-IPO allocation. As of early June 2026, SpaceX represents about 6% of the NASA ETF portfolio. Alongside that, the ETF holds Rocket Lab at about 10% and ASD SpaceMobile at around 6%. The management fee is around 0.75%, a bit higher than RCKT. And because it's US listed, you'll be dealing in US dollars, which adds currency risk but also gives you direct Nasdaq exposure. The key advantage of NASA over RCKT right now is that it already holds SpaceX. If you believe in the SpaceX story and you want exposure today, before the IPO even, this is one way to do it. Option 2. Destiny Tech 100, ticker DXYZ, ends listed. The second option is Destiny Tech 100, trading on the NYSE under the ticker DXYZ. This is a different beast entirely. It's a closed-end fund that invests in private technology companies, and its largest holding is SpaceX at approximately 14% of the portfolio. It also holds stakes in OpenAI and Anthropic. But here's the catch, and this is really important to understand. DXYZ is a closed-end fund, which means it can trade at a significant premium or discount to its net asset value. In other words, you might pay significantly more than what the underlying assets are actually worth. When you look at DXYZ's fund page, you can often see it trading at a meaningful premium to NAV. That premium is essentially what you're paying for access to private company exposure before they list. When SpaceX lists publicly, that premium could compress, which means DXYZ holders could actually see the fund price fall even if SpaceX stock does well. That's a risk unique to closed-end structures. DXYZ is more of a speculation than a pure investment. Higher risk, potentially higher reward, but you need to understand what you're buying. Option 3. Nasdaq 100 ETF, ticker NDQ, ASX listed. The third option is the one most Aussie investors probably already own, the BetaShares Nasdaq 100 ETF, ticker NDQ. This tracks the 100 largest non-financial companies on the Nasdaq. Now, SpaceX isn't an NDQ right now, obviously, because it's not listed yet. But once it lists and grows, it becomes eligible for Nasdaq 100 inclusion. There are actually fast entry rules for very large new listings. Companies above a certain market cap can be eligible for index inclusion after just 15 trading days of trading. If SpaceX enters the Nasdaq 100 index, every passive fund that tracks that index, including NDQ, automatically adds SpaceX as a holding. You don't need to do anything. The downside: NDQ has 100 holdings, so SpaceX would be one of many. The space exposure is diluted compared to a pure play fund like RCKT, but at 0.48% management fee versus 0.57% for RCKT, NDQ is cheaper. Let me put all four options side by side so you can see the trade-offs clearly. BetaShares Space ETF in ASX. Ticker RCKT with MER 0.57% per annum. SpaceX Fast Entry. Space Innovators ETF in Nasdaq. Ticker NASA with MER 0.75% per annum. SpaceX 6%. Destiny Tech 100 ETF in NYSE. Ticker DXYZ with MER 2.5% per annum. SpaceX 14%. Nasdaq 100 ETF in ASX. Ticker NDQ with MER 0.48% per annum. SpaceX is post-IPO. As you can see, RCKT is your pure-play ASX option with the fastest expected path to SpaceX inclusion. NASA already has SpaceX exposure but charges more. DXYZ has the highest SpaceX concentration but comes with closed-end fund premium risk. And NDQ is the cheapest, most diversified option but with the most diluted space exposure. The right choice depends on your risk tolerance, your existing portfolio, and whether you already have US brokerage access. The risks: let's be real. Alright, we've spent most of this video being excited about space. Now I want to pump the brakes just a little bit and talk honestly about the risks. Because there are real ones. Risk 1. Concentration risk. RCKT holds 30 stocks. That's it. Compare that to A200 with 200 Australian stocks, or BGBL with 7,000 global stocks. In a 30-stock portfolio, if 2 or 3 companies blow up, and in the space industry, rockets literally do blow up, it can materially hurt your returns. Thematic ETFs are inherently more concentrated and therefore more volatile than broad index funds. Risk 2. Valuation risk. The SpaceX IPO is priced at a staggering valuation, $1.75 trillion before it's even traded a single share on public markets. Many of the other space companies, AST SpaceMobile, Planet Labs, have also been priced for significant future growth. If that growth doesn't materialize on the expected timeline, share prices can fall hard and fast. This is not a safe sector. Risk 3. Long time horizons. A lot of the most exciting parts of the space economy, Starship commercial launches, lunar bases, asteroid mining, are years or even decades away from generating meaningful revenue. You need to be patient. If you're investing with money you might need in 2 or 3 years, a thematic ETF like RCKT is probably not right for you. Risk 4. Currency risk. RCKT holds global companies, all priced in US dollars. When the Aussie dollar strengthens against the US dollar, your RCKT returns in Australian dollar terms get reduced. Currency can work for you too. If the AUD falls, your RCKT gains are amplified. But it's a variable that's completely outside of space industry fundamentals, and it adds uncertainty. Risk 5. Elon Musk concentration. I have to say this out loud. SpaceX, once it enters RCKT, will likely become a significant holding, potentially the largest. And SpaceX is inseparable from Elon Musk. His decisions, his public statements, his other business activities, they all affect SpaceX's share price. That's a single-person concentration risk that's unusual even by thematic ETF standards. It's not a reason to avoid the investment, but it's something you need to be eyes open about. Risk 6. This is a satellite allocation, not a core holding. This is probably my most important point. RCKT and any space ETF should be a satellite position in your portfolio. A small slice. 5%? 10% if you're very conviction? Not 30%. Your core should still be broad, diversified, low-cost index ETFs. RCKT is the exciting bit around the edges, not the foundation. How to actually buy RCKT. Alright, let's get practical. If you've decided you want exposure to RCKT, how do you actually buy it? RCKT is listed on the ASX, the Australian Securities Exchange. That means you can buy it through any Australian brokerage platform that gives you ASX access. That includes CommSec, Selfwealth, Moomoo, Stake, Perla, NabTrade, and most others. The process is exactly the same as buying any other ASX-listed share or ETF. You open your brokerage app or website, you search for the ticker RCKT, and you place a buy order. I am on Moomoo mobile app. Let me quickly show you what this looks like. So here I've searched for RCKT in the brokerage. You can see the current unit price and the daily trading volume. For a brand new ETF, volume might be lower than established ETFs like NDQ or A200. That's normal and expected for a new fund. When you place your order, I'd recommend using a limit order rather than a market order. A limit order means you specify the maximum price you're willing to pay. A market order just fills at whatever the current asking price is, and for lower volume ETFs, the bid-ask spread can occasionally be wider than you'd like. A limit order protects you from that. Set your limit price within the bid-ask spread, typically right in the middle, and your order will fill quickly when the market is open. 4 US-listed ETFs, NASA, DXYZ. If you want to access NASA or DXYZ, you'll need a platform with US market access. Stake and Interactive Brokers are the most commonly used by Aussie investors for this. The process is similar. Search the ticker, place a limit order, but you'll be dealing in US dollars, so factor in the currency conversion and any FX fees your platform charges. Alright, let's bring it all together. Here are the 4 things I want you to remember from today's video. Number 1. The space industry is a real, growing, investable sector, driven by falling launch costs and an explosion of commercial applications. It's not science fiction anymore. Number 2. RCKT is Australia's first ASX-listed pure-play space ETF. 0.57% MER, 30 global holdings, listed May 2026. It has a fast entry mechanism that should see SpaceX added automatically after its June 12th IPO. Number 3. International alternatives exist. NASA already holds SpaceX. DXYZ has a large SpaceX concentration but comes with closed-end fund risks, and NDQ will passively include SpaceX once it enters the Nasdaq 100. Number 4. Space ETFs are high-risk, thematic, concentrated investments. They belong as a small satellite allocation in your portfolio, not as your core holdings. Eyes open. And here's a question for the comments. Would you add a space ETF to your portfolio? And if so, would you go RCKT on the ASX, or would you open a US brokerage account for NASA or DXYZ? Let me know below. As always, none of this is financial advice. It's educational content to help you understand the landscape. Do your own research, read the product disclosure statements, and if in doubt, speak to a licensed financial advisor. See you in the next one.